Boy, that time flies when you're having fun, doesn't it? But back in the action tonight once again. Hope you guys had a fantastic day out there. It's Thursday evening. It's April 22nd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Friday's trading session. I got a great video in store for you tonight. Charts are all prepped up in the background, as you can see. Got the E-mini, got the Nasdaq, and of course, we got that gold, the yellow metal on our radar for tomorrow. Speaking of tomorrow, right, boy, the bottom got pulled out from underneath these markets here today. S&P tumbling, Nasdaq tumbling, gold maybe not tumbling, right, kind of slowly chopping its way lower here, but the markets are bearish, as you can see here, going into tomorrow's trading session. The big question we have, though, is this it for the bulls, right? Is this it for the bulls? I mean, you know, what if you read the news media right now, the rug got pulled out because some comments out of President Biden regarding almost doubling the capital gains taxes, right? So are the markets going to digest this overnight and see this as being another buy the dip, right, opportunity? We can go right back up to those highs tomorrow. I mean, we got some big ranges from yesterday, so we got some magnets overhead. Are the buyers going to see this as a buying opportunity, or will those buyers be walking into a mess of sellers on a pullback right now? I'll tell you, the bears have the edge right now. I got a great plan, though. I'd love to sell some pops tomorrow. Would love to sell the pops right back down to retest these lows. But again, you know, with this whole move lower here today being kind of like a news reaction, this might not last much longer. So we'll talk about how to buy this stuff on some reversals here tomorrow as well. So I'll take a lot to cover tonight in this video. Before we jump in and put together my favorite setups for tomorrow, I just want to make sure to remind you guys to subscribe to our YouTube channel. You know, we publish this video every evening with my best trade ideas for the following day. So please make sure you subscribe to our channel. And when you do, hit that little bell icon so you always get notified every time I publish something new. And if you guys have any questions, don't forget, you can always post those questions in the comment section. I'm always checking the comments, and I do personally reply to all those questions. So drop those questions if you got them. And if you tune in if you tune in every evening, if you enjoy this video as much as I enjoy making it, do me a big favor, hit that like button, hit that thumbs up button for me tonight. If you guys enjoy the video, always appreciate you guys supporting our YouTube channel by subscribing, dropping those questions, and thumbs up on this YouTube channel here for tonight. But enough of the intro. I'm a bit late here for you guys tonight. Thanks for waiting around. Friday is right around the corner. What do we have here going to Friday's trading session? Again, everything's bearish, right? The rug got kind of pulled out from underneath these markets. Everything was holding the highs pretty well. S&P, of course, finishes bearish in a range. Nasdaq, bearish in a range. Again, gold, maybe not a tumble, right? Kind of a slow slinky going lower. Gold is also bearish in a trading range. Gold definitely doesn't look as strong as the S&P and the Nasdaq, though. Nasdaq are firmly bearish right now. Gold's got some concerns. We'll talk about why I'm concerned about gold here in this video tonight. And as I mentioned, right, I would love to short these pops, right? Short the pops, right? Bear market down, short the pops, bear market down, shorten those pops. Again, gold's got some curveballs, so we'll talk about gold here. But that's kind of where my favorite setups are going to be for tomorrow. But again, as I mentioned, right, range above. It's not difficult to think about this as a buyer's opportunity right now as well. So I would be foolish not to be ready for some buy setups here tomorrow. So I'll tell you, a lot of great opportunities to trade the breakouts, trade the failures. I'm stoked, as the kids say. I'm excited for tomorrow's trading session. Before we jump in, though, and get into the charts, though, let's just make sure we're on the same page here. Tomorrow's a Friday, in case you've been paying attention all week. Last Friday of the month. Is it last Friday of the month here? It is not. We got one more Friday next week for the final week of what seems to be a never-ending, right, fourth month of the year. Now, of course, Friday mornings are early in, early out, right? You got to have a good reason to be trading on a Friday morning after 11 a.m. Eastern time, right? Now, we usually trade till about 11:30, 11:45 during the week, right? But Friday mornings, you can usually set your clock by 10:45. Usually 10:45. What I always do is I have a reminder that goes off on Fridays at 10:45, and I kind of take the pulse of the market. You'll notice we usually do see markets slow down pretty considerably as about 10:45. Now, obviously, we'll play it by ear tomorrow, but you got to have a good reason to be trading. The thing is, you want to be careful with personality. Personality will oftentimes dry up, right? Liquidity dries up. The market's barely moving. Remember, a successful trading is a lot like riding a bicycle, right? It's a whole lot easier when it's moving, right? So that's the thing. After 11 o'clock tomorrow, if it ain't moving very much, just like riding a bicycle, right? It's difficult to balance the bicycle. The bike doesn't do very well unless it's moving forward, right? So we want the market to be moving 11 o'clock Eastern time. Very important time of the day tomorrow morning. So tomorrow, right, do not hit that snooze button. Get to your desk early because, right, we'll get our setups tomorrow. Get in early, get prepped early, and hopefully get out of there early. Enjoy a springtime Friday afternoon. Now, we finally have some more news coming in. It's been kind of a barren week this week here. We got some news coming in tomorrow. There's no shortage of news tomorrow. Got some fireworks. Possibly the biggest news of the week, right? That PMI number, the Purchasing Managers Index. That is an inflation report, right? So everyone's been talking about inflation, right? The Fed trying to keep their inflation numbers in line with their mandates, as they say. But that is the big news tomorrow, right? No matter what the number comes out as, we will be looking for markets to react to that PMI composite flash. And boy, a blowout home sales number today. Do you see that? What was it? 17.2% year over year, right? Home prices are like, what was it? Almost every zip code, at least in the U.S., I think it was every single zip code improved by at least 5 percentage points. It's just insane. So we'll see if that number keeps up tomorrow for the new home sales number. Big difference, right, between existing home sales and new home sales, right? New home sales, they require a lot more skin in the game, right? These developers, they got to go buy the land, you know what I mean, right? So that'll be think of it this way, right? Existing home sales is kind of a medium term, short term economic indicator. New home sales, if you got confidence to buy some dirt right now, right, and roll this stuff into the future, that is a very long-term commitment, right? So that is a longer term. Anyways, long story short, new home sales tomorrow, 10 o'clock Eastern time. Very, very excited to see these two news reports. Been waiting all week for them tomorrow. And that's great because hopefully we'll get to our trade room tomorrow morning at 8 o'clock Eastern time. Hopefully we can find some setups before that news comes out and then trade that, 10 o'clock to 11 o'clock block, which, by the way, has been where a lot of our best setups have been lately. Not every day, right? But lately, the best trades have been in that 10 o'clock to 11 o'clock block. So looking forward to a good day in the trade room tomorrow. So got some big news, right? Hopefully we'll see some good trades, and we'll finish up the week here with a bang. Don't forget, tomorrow morning and every morning, 8 o'clock Eastern time, I'll put all the membership information you guys need. We're going to prep this. We'll prep the charts tonight, get ready tonight, and we'll trade this stuff together tomorrow morning, the opening bell. Grab the link in the description and come out and join us as a brand new advanced member. I would love to see you there, right there with us. But let's get to our charts, though, shall we? You didn't come here to talk about news, did you? Right? We're talking about charts tonight. S&P's ready. Nasdaq's ready. Gold is ready. I'm ready. Let's get you ready as well for tomorrow. Gold's the tricky one. Gold is the tricky one, right? Gold's a tough one. Nasdaq and the S&P are relatively straightforward. Let's jump into the S&P tonight. Now, of course, boy, what a difference a day makes, right? Last time we spoke, we had that channel, right? We had that range. We were talking about buying that, right? Buying that dip, bears once, twice, and back up, right? So that all worked great, right, from last night's newsletter. But then we get, right, from what they're telling us, the reason for the collapse was this proposal for almost doubling the capital gains taxes on high worth earners, right, over $1 million a year. So that apparently is what pulled the plug on that. Now we knew we had this range in last night's newsletter, so it was relatively easy, right? Once you get that 1, 2, 3 to mark up that low, mark up that high, right, and sell the first test is the best test, right? I mean, how many times last night did we talk about that pattern? Probably too many times, right, last night. So if you watched last night's newsletter, you were definitely ready, right, to find that new hidden channel, right, and then get that first test. Beautiful failure right off that high there. So bears have control. It looks like we are now in a range, whether you want to call this the range, which I think is probably more important, or you just want to say we're back inside of this range, which you could definitely say, right? We are bearish right now. We are range bound here on the S&P. Whenever I have a bear market into a trading range, think about a magnet, right? There's a magnet right on that range, and there are two types of trades I always look for in a bear market into a trading range. One of them is a short using a failure pattern above the range. The other is a breakout pattern, right, going lower. All right, so those are kind of the two components that are going to be the most important. Now, in addition to that, we've still got, like I mentioned in the introduction, we still have that range overhead. So, like I said, I mean, this whole move is supposedly all because of news. And once the news kind of wears off tomorrow, we'll see if the buyers do have renewed faith in this market, and we'll see if they run this thing back up the flagpole, back up into that range overhead. So that is definitely something I'm watching for here as well. What are my three favorite setups for tomorrow? Right? If I could choose three, what are my favorites here for tomorrow? My favorite setups, right? My three favorites would be if we get the pop higher. I've got this trend line coming over. I combine that of the highs to find resistance, right? I mark up that swing. I mark up that swing. This kind of creates that sell zone, if you will. My first favorite setup for tomorrow would be, let's get this thing up, get this above the range, right? The range acts as a magnet, lots of bearish momentum. I'm hoping I can get some buyers to come in, try to buy that pullback, and just get short into their stop losses, right? That will be the goal. It'll look a lot like this, right? Where it goes up, buyers come in, and we can sell it right into those stop losses. So that would be kind of my first favorite setup here on the S&P for tomorrow. Get up into these resistance areas. I'm not going to try to foolishly pick a top up here, right? I'm not going to try to predict how high the market will go. What I'll do is I'll wait for it to pop, wait for those buyers to buy that pullback. I assume trying to go back to retest these highs, and if they fail, we should be able to get a nice failure going lower. Now, remember, a lot of times those failures will turn into another channel, right? So kind of a bonus, right, on top of that failure pattern into kind of like a reversal into a pullback right off of that high. You'll notice how I'm drawing this, right, underneath that trend line there. That would be very, very nice for tomorrow. Targets, of course, are down at a retest of that low. But how do we buy it though, right? How do we buy it? Because you'd be foolish not to think this couldn't be seen on a long-term chart as a dip to be bought right now. How do you buy this thing? Well, to buy it, we have to deal with the fact that we're not bullish right now. We're very bearish. You can easily see, right, that nice 1, 2, 3 move. Again, momentum turned very strongly here for the bears. So if I want to be a buyer, I can't just buy a pullback, right, as it goes higher here for the reasons I described earlier, right? We're probably going to fail and come back down into those lows. The way that I would like to buy this, knowing that we have a range overhead, knowing that we have a lot of resistance up at these highs, right? There's a lot of resistance up there. Remember this from last night? A lot of resistance up there. Now, the weekend gap is definitely a big carrot at the end of the stick, right? The weekend gap's a magnet. The range is a magnet. What I'd like to do is see one of these two scenarios. One would be the strong move up, the buyers hold the pullback, and we jump off the moving average. Right? In other words, the buyers don't fail, right? The buyers succeed and hold on to it, right? Much like this one, 1, 2, go, right? That gives the bears control there. This will give the buyers control. Once those buyers take control now I can mark up that high, I can mark up that low, and I can buy that, right? I can buy that first pullback. Okay, now remember that pullback, I'm not just buying it blindly, right? I'm using entry setups, right? My two favorite entry setups, entry triggers, if you would, at the low, are going to be seller failures and bear traps, right? Those will be the two that I'll focus on to buy off of that low. Now, I'm not going to go into all the details of the entry triggers, right? In this video, we'll talk about what I'm looking for and where I'm looking for it, but I cover all the details of all my favorite entry triggers, my entire 3-step strategy, and I'll send you guys lots of examples of that stuff as part of our free trading course. So I would definitely grab that little link that pops up there in the upper right-hand corner. Grab the free trading course because you'll learn all my favorite entry techniques. You know, for example, another one of my favorites, which would be another one of my second favorite going higher here. Let's say this thing rips, right? Let's say in Asia, they just jump all over it, right? What if we do run higher here? It's obvious now the buyers have this, right? It's strong, it's ripping higher. We get a shallow pullback, a higher high in price, and that trap. This will be another good setup. In fact, this is probably the most likely if we do get this reversal. Now remember, extra bonus points for finding this off the low of a channel. It's not required, but it certainly does not hurt. Again, it's a strong run up, a shallow pullback, a higher high in price, and a trap low. Now, you'll notice there's one right over here, right? Strong move down, shallow pullback, lower low in price, trap high. Okay, these are very, very common when you get these strong moves. So that's a bearish example. This would be a bullish example. That's the second scenario, right? I would like to look forward to that buy scenario going back up into that trading range. And then third, right? What's my third scenario here? The third scenario is my third favorite trade would be a breakdown. Now, the most important thing to keep in mind is we have that low down here, and the bears are really trying to get back to that low right now. So I can't really do much selling, right? I can't really do much selling into that area. However, if we can see a strong roll, not that strong, but if we can get through those lows, right? Does not have to be a real strong move down. If we can hold that pullback, and if we can get some jump, right? Remember, it's not so much the strength of the first leg, it's the strength of that jump off the moving average. If we can get a nice turn off the moving average, mark that low, mark that high, and again, I'm looking to get short off the top of that channel, right? I'm looking for things like trap entries, failure entries, pullbacks, right, as it rolls over. And again, I'm not going to cover all the details tonight, but I will go over all the specifics, all the rules, and you'll see hundreds of examples of those setups as part of the free trading course, right? So grab that linked up in the upper right-hand corner, all right? So that's as we go lower. Now, where do we think these bears want to go? If we do get this thing, we know where the buyers want to go, right? The buyers want to go back up, and they want to get back up to these highs up here. The bears, I'll tell you, if we can get a breakout running lower here, keep your eyes on that 40.73. 40.73 is a big, juicy range from, dare I say, the beginning of, the beginning of the month, right? We go into the end of the month. What do you think the chances are by the end of the month we are right back? No April Fools, no April Fools on that, right? Well, unless you're holding the buy side, I guess. But that will be a good target if we get that 1-2 go. Find that low, find that high. Remember, I'm not going to sell the first pullback, right? I'm not going to sell the first pullback. Got to show me some proof, and then I'll sell that next breakdown, right, as we go. My big thing right now is how does this pullback look, right? How does this pullback look? All right, we're looking good. S&P. Now I'm going to touch on some more. I'm going to touch on some more stuff in the Nasdaq that I want to go over on the S&P right now. So let's go to the Nasdaq because the Nasdaq is very similar to the S&P, right? But what I'm going to cover on the Nasdaq right now can also be applied to the S&P for tomorrow. You'll see what I mean here. Let's go to the S&P now. Sorry, let's go to the Nasdaq. Right now, the Nasdaq very, very similar. Right, we got that buy below the range. We talked about this right last in the newsletter. They take out those highs, and then right the markets get Bidened. Right, they get the White House press release about the capital gains, and right that pulls the plug there. Great example once again, right, of a 1-2 go. Right, mark that low, mark that high, get short off the first pullback. We're bearish, right? We're ranging. The Nasdaq does look like we're back inside that range from earlier this week, right? A few days ago, whereas the S&P looks like it's kind of developing a new range. Now, couple things really similar, right? Really similar to the S&P. My favorite trade on this would be to get this thing up into resistance, right? I've got resistance. I have resistance. This is a really cool level right here. That 13,817 area. If you actually extend it out a little bit further, right, you'll notice it goes even further out. So that's a pretty hot spot right there. 13,817 and a quarter, we'll call it. What I'd like to do is, right, again, is get up into some of this resistance, get a buyer failure as we go. And then, of course, if we do get that run higher, right, it's those reversals as we go, or, right, it's that breakdown. Let's talk about some variations, because a lot of what I just talked about on the S&P can really be applied to the Nasdaq. So without just, repeating myself here like a broken record, let's talk about some variations, because there's actually a lot more that I really can't cover all in just one video. So, for example, one of my favorite setups for tomorrow on the Nasdaq is let's get up right in this area of resistance, right? Let's get those buyers to come in and try to buy the pullback, and we can sell right into their stops. A little bit too much, right? And we can find that channel, right, and short it on the other side, right? Failure pattern, and again, short off the top of that channel. These are very common setups, very common. Let's say, for example, we shoot up, we shoot back down again, and now the only way I can get in is to sell right into that rising support trend line. Okay, again, this same idea may apply to the S&P, right? S&P is the same problem there, that rising support. What do we do? And we'll go over this tomorrow, obviously, once we actually see this happen. But imagine now, right? Again, if we can get this pop up, if the buyers can hold, right? Or sorry, the buyers fail, and if I can get a good, what my rule is, if I can always get a 1-to-1, right? That's good enough for me, right? That's good enough for me. But if we start seeing it go like this, right, where it comes over like that, right, a little bit lower now I can't get that 1-to-1 anymore. Okay, so what do you do in those situations? What you do is you look for traps. You wait for traps above those highs. Now these are really, really awesome setups. The hardest part about them is they take some time. They do, right? They reward patient traders. So what you'll look for is you'll look for the buyers coming in. This will usually be what happens, right? The buyers will come in, they'll try once, right? They'll pop it up. The buyers will try once, right? The bears will go, nah, I don't want to sell that close to that rising support trend line, right? What'll happen is it'll go lower, it'll pop up. Okay, and then once it starts running into, oftentimes the trend line here, trend line, you know what I mean? It'll start running into this overhead resistance, and you'll usually get this nice, right? This nice fat juicy signal candle, right? Closing below the moving average, and again you can grab that, right? That short. And then remember, these ones love to turn, grab that new channel. Over here, you see where we're going with this, right? And that short off the high there. All right. So a lot of this is similar, but the one kind of nuance, right? The one kind of gray area of this is that trend line, right? We go up. Do we get a bad spot for it? All right, trap it, right? Look at that trap. Traps are great to avoid selling too low, right? To avoid selling too low. Now again, if the buyers can hold the pullback, right? If they hold the pullback and they go, bingo. Now we've got that 1, 2, 3. I can mark up that high. I can mark up that low. And again, I always like to look for the first test, right? The first pullback is always the most impressive. One of my favorite techniques to get into that trade is a trap, right? So I'll go as we go higher here. I find my highs, I find my low. I look for a little swing low right there, right? Little trap into a failure, into a pullback, into a strength move, right? And by the way, again, I'm just simply doodling right now about what I'm looking for and what I'll be focused on. You can learn more about those specific entry triggers, the rules I use, what they look like on a real chart, right? Again, this is just my illustration, right? You'll grab that free course link in the upper right-hand corner. You'll learn those details. So that's kind of very similar right here in the Nasdaq. One thing that I want to make sure we talk about, though, is what if the market just simply runs and we find ourselves treading water up here, right? What if we end up getting stuck back in that trading range? Now it's a bull market, right? Basically, it's a bull market back into a range. What do we do in that situation? Bull market, find a support level and look to combine those support levels below the range with what we call failure patterns. Very simple idea, right? Very simple strategy. If we blast higher, again, maybe we open up an Asia, everybody goes, buy this thing, right? And price runs, it starts chopping around inside that trading range. We buy below the range with a failure, right? Or maybe it jumps up and starts grinding, right? Spike and channel. Okay, what do you do then? Spike and channel, look at the first couple swings, wait for the price to pull back, look for bears to try and fail, right? And buy it back up again. So there's some variations to this we can definitely look for. Again, everything I talked about on the S&P will also apply to this, right? So we got plenty of options no matter what this market throws at us. What if we go lower here, right? Now, if we go lower, right, we know we got the 1, 2, 3 breakdown, right? We got the 1, 2, 3 breakdown, 1, 2, go. Right? Again, it doesn't matter how strong the first leg is. It's that jump off the moving average. Mark that low, mark that high, right? Sell off the high, right? Okay, that's the easy one. Or it's the strong move down, one of my favorites, strong move down, shallow pullback, lower low, and trap high. Right? Always a good one, right? Again, in this one, you're not getting that 1, 2, go, right? You're getting the see ya, and it just collapses, right? When it collapses like that, shallow pullback, lower low in price, hit it, right? We call those 2-try traps, right? Traps are always great. And again, extra bonus points for combining the high of that channel, okay? Now, one variation to keep in mind for tomorrow, you'll notice, right? We are at a major low, right? We're at a major low right now. We had a range above us, right? Could I buy this thing down here? You definitely can. Let's say, for example, we take out these lows. Okay, here's a variation. Again, you can apply this to the S&P as well, right? Let's say we take out those lows, and now, right, the bears, they're trying. Well, when those bears, if they try a few times, right? If they try a few times, what I can do is I can look for entries now to buy a trap below that low. These are failure patterns, but they're called nested failures, right? They're called nested failures. Okay, I can buy that trap low. One of my favorites between you and me is to draw that trend line here, trend line there, and that's one of my favorites right there. Right? So strong move down. Again, we're sitting at major support. The range above us is a magnet, right? The bears have retested their low, right? They've done everything they need, but now they're struggling, right? Let them try once, let them try twice, and rip it, okay? We could buy off the support trend line, buying the stop losses. Also, too, remember, a lot of times these things will rip higher, mark that high, mark that low, and go. Now, what I'll tell you the same thing I tell all my clients, right? If you don't feel comfortable getting in on the reversal, right? These kind of nested failures, you've got that first pullback in your back pocket, right? You've got an ace up your sleeve. The key is just what you don't want to do though is you don't want to chase it as it goes higher. Because you know what's going to be up there? Bears, right? Bears are waiting to scale in as the market goes higher here. Let those bears come in. Let them try to get short into you and just buy right into those exits. Okay, some nice, again, this could also apply to the S&P. The S&P is pretty much the same scenario, right? Sitting at some major lows there. So now we got some pretty good variations, All right, so we can buy those lows, we can trade through the lows. We're just waiting to see what we actually get, right, for tomorrow. I'm getting excited about tomorrow just talking about this right now. Hope you are too. All right, let's keep going. How about some gold? Wrapping things up here in the gold. Now, I warned you about this one, right? Gold, and I know the chart is not the prettiest thing in the world, right? This is not exactly a beautiful sight, right? Kind of grindy, very choppy session here, and it is what it is, right? So this is a market that, well, on the S&P, first of all, let's say the Nasdaq, right? The Nasdaq pretty much collapsed all the way back and took back all of it, right? They went up, and again, the bears took back all of it, right? They've taken back all of it on the S&P and the Nasdaq, pretty much all of it on the S&P and Nasdaq. On the gold, though, they're not even close, right? On the gold, though, they're not even close. So the gold has a lot of open space. Now, that's great if you're a seller and we keep going, but it's not difficult to look at this and say, we're only about halfway off that high right now, right? You'll notice that range back there. So this one is going to be a little trickier because it's just not as bearish, right? This is not as clear a bear market. S&P and Nasdaq, you've got to be kind of bold right now as a short-term trader to buy that. The gold's not so, it's not there, right? It's not at that point yet. So I would assume there's a lot more buyers in the market on gold right now than there are on the Nasdaq and the S&P. Now, you'll notice here, clean this up real quick. 1, 2, 3, 4, right? What happens after 4 legs? Usually trends go in threes. So when you see something go 4 legs, you know that's usually about as far as it's going, right? Remember, most trends go in threes. Okay, but like we saw last night on the S&P, right? 4-legged moves they're not unheard of, but they generally act as a very strong level of support in this case. So this area right here, right? Big time support. Let me clean this off here now. I just want to make sure you guys can see kind of how I'm doing that. All right. So we've got A, not a very big reversal, right? We're leaning more to the buy side. B, we've got 4 legs down. Not a great place to get short. You ready for the third one? It's third one? All right, third one is the range. Okay, now I know this range may not be that clear, but there's a whole lot of everything overlapping right in that area right there. If you were to look at a kind of a volume profile on this, right, you'd see a lot of volume here, a lot of volume there, right? There's a lot of volume right there, right? And that's good for bears, right, because they can sell above these highs, right? And that's one of the setups I'd like to use here. But what's the problem with this, though? Momentum, right? We are going to rotate off the low. Okay, now there's a very big difference between a bear market that is bearish into a range that simply pops up and we'll sell it back down in, right? That's easy pickings. Very big difference between a range that does that and a range that goes lower and then comes back up. That right there is a bull market waiting to happen, right? That is a reversal waiting to happen. So we got to be careful on that, right? Yes, I do want to sell, but this rotation off the low, right, it's 3 strikes, right? We've got only about a halfway pullback, right? So we're more bullish. Well, we're definitely bearish, but we have some bulls in the market. We're 4 legs down, and we're rotating off the low. Everything right now says you better be careful to getting short as this market goes higher here. And then we've got one more, right? There's a 4th problem here. I know, right? 4, it's the rising support trend line. Now, on the Nasdaq and the S&P, this is a puppy dog, right? It's very shallow, right? Nobody's really worried about that trend line when it's shallow like that. When it's steep like this, yeah, this is not easy. So basically what you want to think about is, and we talked about this in the Nasdaq, right? As we go higher here and I run into some look, there's a lot of nice resistance up there, right? Take the pendulum swing below the low, put that above the high. I mean, this whole area right here is a great level of resistance. Our problem is that as we go higher, what's going to happen? That darn trend line. And so what we're going to have to do is we're going to have to either look for, you guessed it, a trap, right? Traps are always the best, right? Whenever you're worried about selling, in this case, I would say selling too close to support, but whenever you're worried about selling too low or selling into support like this, great spot for a trap. Or which might be the easier setup, is to wait for the pullback on the other end, right? So again, it's a bull trap, right? I call these 2-try traps, right? They're basically 1 try, 2 try, right? For those buyers. Sell above the high of that prior swing, and then you got, of course, the breakdown, pull back, right? And that short off the trend line. Okay, those are the two. And again, we may have trouble finding that first one. The second one might end up being, right, the easy one. Now, that would be kind of my favorite setup. If I had a my way for tomorrow, right, we'd go up, get up into these. I love these expanding triangles and ranges, right? Find that expanding triangle, get those buyers once, get those buyers twice, give me that trap. And I love this setup. I love this setup pattern because what it does is it avoids the trend line, but more importantly, what it does is it absorbs the buyers. Remember, there's a lot more bulls in the gold than there is in the S&P and the Nasdaq right now. So I would not be surprised if you see buyers put a little more oomph right in that move. I like that it respects the buyers, and I like the fact that it respects that trend line. It's a great setup down there. And then I'll look for, of course, that move back, that up and over. That will be the ice cream sundae at the end of the deal, right? That will be a great cherry on top, right, to get that hit going lower. All right. Now the good news is if we chop around here for a while, right? If we go sideways on this, that really does a good job at it removes that trend line, which is great. Now if we go sideways and we pop up, now my only concern is that momentum. Right? That's the only concern I have now. So now it's just 1, 2, back down in. It's not having to deal with that trap and work around the trend line. All right. And again, we'll look more closely at this tomorrow in the trade room. So again, if it does go sideways here, the plan is still basically it's a bear market into a range. It's just when we spit out the other side, it's going to be very bullish. So once we get that market to spit higher now up into areas of resistance, my plan will be, because of the overall bullishness, will be to respect the bulls, let those buyers try a couple times, right? And again, one of my favorites is that channel low high and sell off that high, right? And again, these are basically failure patterns, right? It's a variation of a failure pattern. You'll learn all about those failure patterns in a lot more detail in that free trading class that we offer here at School of Trade, right? So if you want to see real examples of those setups, definitely grab that link in the upper right hand corner, right, and grab that. My second favorite trade for tomorrow would be a bullish reversal. Now, we may get a strong run up here. We may get the buyers hold that pullback and go, right? What we're going to have to worry about, though, is we're going to be right inside that range here. There's not a lot of wiggle room up here. So what you want to focus on are traps. Traps are going to be the easiest way to make money as the market goes higher. Now the trap pattern could be as simple as strong blast up, right? Shallow pullback, higher high in price, and trap low. Okay, that would be a great trade as we're going higher. All of that momentum. Buyers will say, heck with the range. We want to go back. We're shooting for 90. Right? We're shooting for those 98 half highs, those big round number highs, right? Again, strong move up, shallow pullback, 2-try trap. What will be another one, a little more difficult, would be that jump up. Buyers hold the pullback, and as we're going higher now, right? You guessed it, right? We find that trap, and we look for traps below those lows. Just remember, traps are probably going to be the best possible entry as we go higher because of what? Because of concerns about buying too high. All right, and we'll know more about it once we get up there. Once we get up there tomorrow morning, we'll know more about kind of how to trade that stuff. Unfortunately, I can't go over everything tonight in the video, but that's what I'm looking at as we go higher. All right, so we know how to trade it long. We know how to trade it short as it goes higher here. The easy money tomorrow will be the downside, right? The downside will probably be the easier money here. We get all that open space until we get down to that 63.5, right, and that 58.2. So a lot of open space down there. We just have to make sure we break through this range And remember, we're 4 legs down, right? So it's 1, 2, 3 break down, mark that low, mark that high. This could be very steep. This could be very shallow, right? Sometimes what'll happen is it'll go like this, right? 1, 2, go, and it will kind of chop, 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 right? That's okay. Mark up that low, mark up that high. If it does chop like that, it just sets you up for such great entries off traps, right? But again, it could be a bull trap. It could be a buyer failure pattern, right? I cover all the smaller details and stuff in the free class I keep talking about, but that's the idea. Or maybe this thing just pukes, right, and collapses here. Strong move down, shallow pullback, lower low in price, right? Trap high as we go from there. And again, find those hidden channels, combine those traps off those highs, right, for that hidden channel. So I got some spots going lower here. Really right now, I'm waiting for a breakout. Could I buy this thing down here? Right? Could I buy it? I definitely could. I definitely could. The range overhead, the 4 legs down, you definitely could. What I would do though is this move right there. That's a relatively strong move. I don't think I would be comfortable trading it on a trap right here just because of that such a strong move down. But if they took out that low and the bears tried once, tried twice, right? I would definitely be open to that, right? Mark that high, mark that low. Maybe we get a little trap low right there. Remember, you can buy off that trend line. You can buy into stop losses. You can definitely buy the first pullback after it rips the heads off the bears, right? That's a great trade right there. Again, take out those lows, let the bears get what they want out of it, and then give them a couple tries here at these lows. These nested kind of reversal patterns here, they are really great when you get a range up above you. All right. Just remember though, don't force the trade long. It's very bearish right now, so we do want to give those bears benefit of the doubt. All right, guys. Now I'm sure I missed something tonight. I'm sure the markets will lose something I didn't anticipate tomorrow morning. But that's why we have our trade room. I would love to have you there, right there with me tomorrow morning, 8 o'clock Eastern time. No excuses. I'll put all the membership links you guys need. I'll put all the info in the description of this YouTube video. Grab that link. Get registered. 8 o'clock tomorrow morning. We open up. I want to see you there with me. If you're not on the YouTube channel, if you're on the blog right now, I'll put a button right below the video on the trading blog. Hit that button, get registered. We get a bunch of membership options going on right now. And don't be afraid to call me tonight. If you act quickly, I can get you registered for tomorrow morning's trading session, but you got to act fast, right? 8 o'clock Eastern time will be before you know it. Grab that live chat on the left. Grab that live chat on the right. And as always, you can drop questions in the comment section below if you got them. But that is it for me tonight, guys. I hope you enjoyed the video. Hope you learned a lot. Hope to see you tomorrow, and we can trade this stuff together. Don't be bashful. Call me in the office if you guys have any questions. Drop those questions in the comment section. And I hope by now you guys have subscribed to our YouTube channel because, as you can see, we are not messing around on this nightly newsletter. Guys and gals, no video tomorrow night. Friday night, of course. They do let me out of my cage. I'll be back next week for a full week next week. Last week of the month. Always excited. Always excited. All right, that's it for me. You probably have heard enough of my voice here for one evening. I will see you guys tomorrow morning at the opening bell. If not, we'll see you guys next time. As always, be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.